Hey everyone, Chad Brown here, and welcome to another episode of the KB article. Our goal here, as always, is to enhance the growth and financial well-being of our listeners, clients, constituents, all of those that we serve. Today, just wanted to chime in for a few minutes here. It's not going to be a long version. It's just me chatting a little bit about kind of the transition of businesses through a certain life cycle from startup and entrepreneur small businesses specifically, not those that are huge, large scaled to a certain point, but generally most of the small businesses in America, those that are started by someone that's somewhat entrepreneurial, maybe they kind of created a job, took something, a skill they were good at and created, and now they're growing it into more and more of a business where they've got employees, they're delegating, they're scaling a little bit. It's an interesting cycle. And what we often see, especially from the tax side of thing, is those businesses, when they're bootstrapping everything together, they're not all the time, but in a lot of cases, what we see is they are not taking the appropriate steps to manage their finances. What do I mean by that? They basically operate out of their bank account. Okay. Now, that lets you know if you have money to pay the bills and things, but it doesn't tell you what's happening next week, a couple weeks later, that sort of thing. You're not forecasting. And not that it's critical for all small businesses to do it, but if you want to grow and scale and really have a financially well-performing machine or business, that's something you get into. But early stage business owners typically don't do that. They operate out of their bank account. Okay. Now, why is that? Why is that? The folks that we talk to, there's a couple of reasons typically. It's one, I don't have the budget for it, right? I'm bootstrapping all this together. I'm kind of the IT guy, I'm the sales guy, I'm the production guy, I'm the accountant, right? So they don't think they have the budget for it. And they're going to do it themselves. That we'll just do it at the end of the year, or I'll do it next month. So we can't kind of keep putting it off until then. It might be a little too late to make decisions. Or, hey, I've got somebody that's doing it. Or I signed up for QuickBooks Online. It's doing it. It's putting it all in there. So that's some of the common ones. Well, that may be true. You might be bootstrapping your business a little bit. You may be set up on QuickBooks Online, but is it set up right? So you really want to make sure that you are doing this right. And, the crazy thing is you should really expect a return on investment. I know that's shocking. Most small businesses think that bookkeeping, accounting, tax services is a cost, not an investment. Well, they're partially right if they do it when it's too late. So if you're doing the bookkeeping after the end of the year for the previous years, so you can file the tax returns, it's a cost. You're not getting really any benefit from it. But if you're paying for somebody to regularly maintain your books, at least give you some guidance, maybe some tools as to where you can improve, what you can do better, and then you're discussing at least once a year, if not more. I preferably like more, at least quarterly, about the tax implications of where you're at currently in your business. Then if you're not doing that, then yes, it is a cost. But just like any dollar that you have in your business, that dollar should generate some sort of return. And a return is either an increase, right, in sales, right? You're getting an increase in sales because you invested $1, you're increasing sales, or you invested $1 and you're cutting costs. But in the end, your net, your bottom line should grow based on the expenditure of each dollar. And accounting and bookkeeping and tax is the same way. So anyway, we see generally folks in business that are just starting out, they're more that reactionary. Let's do it after the year. there's really no huge benefit there. So then what happens is they slowly start to either see some success, end up owing a lot of taxes because of that success. They didn't do anything about it. Um, or they're forced with maybe kind of going out of business, or I don't know how to make this work. So then they reach out to somebody, right? Or they get a letter from the IRS or from the state, sales tax, payroll. Something isn't right. Then they reach out to them, okay? And that's okay, and that's fine. And we can get in there. So that's kind of that next stage is now, okay, now you've got some pain and you are going to get somebody in to help relieve that pain. So we come in and we can then proceed to ease the pain, provide the services that's needed, and then try to present more of a proactive approach to it. Now, some will decide whether they want to do that. Some will not. They say, you know what? I'll do it at the end of the year. Okay. But some will. Okay. And typically those are the ones that then transition to that next stage and become more and more successful. And then we're doing tax planning, investment advisory, not us specifically, but through our connections or folks that they already know. But they're more on a financial path, a clear financial path, right? Because they've got those that are professionals at what they do. They can focus on their work, their business, generate the revenue, focus on the operations. But professionals can help them grow that financial bucket of their business, right? And as most 98% of small business owners are family businesses, flow through entities, right? So it's going to definitely impact their personal well-being. So that being said, you should be expecting a return on your investment when you hire a bookkeeper or accountant or tax prepare. I don't like the word prepare, tax professional / strategist, right? They should provide you some sort of return on your investment, whether that's minimizing your tax liability through different strategies or through their financial reviews and information and discussing that with you. They help you find ideas in your business that will help you grow, right? Generate more sales, cut costs, increase gross margin, net margin, all of that. So anyway, those are just some thoughts that pop through my head. But again, just kind of there's businesses that create a job for themselves and then eventually scale. There's typically, and they're doing everything themselves, the accounting, the bookkeeping, everything. Some will jump in with somebody right away and have them do it, right? A professional do it. But most, that's how they start. Then they'll transition into, hey, I got this pain now, right? I owe too much, right? So then they get with an accountant, a professional that can help them. Some will stay with that and then take that proactive approach to move that at next level. Others will just say, I'll just kind of be reactionary throughout the year, and at the end of the year, I'll give you my stuff. You do the tax, whatever. Okay. Then there's those that really typically are the most successful ones, financially, business-wise, size of their business. Those are the ones that get professionals from the outside that are good at what they do to come in and help the business increase their success and financial well-being. So anyway, I hope this helps. Something to think about. If you ever have any questions regarding this, we've got some information we can send out to you. We'd love to share with you about the importance of reviewing your financial statements, that sort of thing. You can reach us on our website, KintzlerBrown.com. You can also give us a call at one of our offices. Best number to call is 712-352-2505. And if you don't reach anybody, just leave a message. Someone will get back with you, or shoot an email to info@KintzlerBrown.com, or follow us on Facebook, Instagram, any of the channels at Kintzler Brown. All right. Look forward to talking with you guys again down the road, but hopefully this helps you.